If you've been riding silver's 146% parabolic rally, listen closely. Right now, the MACD just printed a bearish crossover that's warning every institutional trader to lock profits or position for a sharp pullback. This isn't random noise. It's a textbook signal after an extended move that's trapping late bulls before the next leg. There is one danger zone and one hidden opportunity today. I'll show you both. Stay until the end. I'm giving out 3 exact entry and exit levels you can use immediately to trade this setup. Let's start with my instant market verdict. No fluff. Silver remains structurally bullish on daily and 4-hour charts, but we are in a fading long session, short-term bearish momentum against a longer-term uptrend. The bias is simple. Sell rallies into resistance, buy deep support bounces, but avoid chasing price in either direction. The one invalidation level you must write down is 84.115. If we break and close above 84.115 today, this bearish crossover trap is invalidated, and bulls regain full control to target 86.07. Write this number down. If we break 84.115 today, the whole structure shifts, and you must abandon short setups immediately. Now let's dive into the technicals, starting top down from weekly and daily down to 4-hour and 60-minute charts, where the real battle is happening. On the daily chart, silver is firmly bullish. Price is holding above MA20, MA60, and MA200, all sloped upward, acting as a strong floor for buyers. The 200-day moving average is sitting like a brick wall below the market, preventing a full collapse and keeping the longer-term trend intact. On the 4-hour chart, the trend remains bullish as well, with price above key moving averages, but momentum is fading fast. Here's what most traders miss. The 4-hour MACD has just completed a bearish crossover in overbought territory, a classic warning sign after a vertical rally that buyers are exhausted and sellers are stepping in. On the 60-minute chart, the bearish momentum intensifies. MACD is below zero, histogram turning lower, confirming the short-term shift. Our daily support levels are 76.91 and 75.33. These are not random numbers. They're swing lows and demand zones where institutions will step in to defend the bullish structure. Our daily resistance levels are 84.115 and 86.07. The first is the near-term ceiling where the MACD trap triggered, and the second is the major swing high that caps the current rally. Every level I'm giving you is actionable right now. No guesswork. Let's connect the technicals to the fundamental driver and cross-asset linkage that's pushing this move. The big news in the last 24 hours is crystal clear. Silver's MACD bearish crossover after a 146% rally is the key catalyst forcing traders to reprice short-term risk. This isn't just a technical event, it's a sentiment shift. After a nearly 150% surge, silver was overextended, with speculative positioning at extreme highs, and the MACD signal is the trigger for profit-taking. Silver, as the fear architect and industrial metal proxy, is also reacting to real yield fluctuations and dollar index moves that we cover daily. When the dollar firms and yields tick higher, silver faces headwinds, amplifying this technical pullback. My 1 to 2 week directional lean. We see a corrective dip towards 76.91 to 75.33 support before bulls resume control, targeting 86.07 and beyond. The event that invalidates this thesis, a sustained 4-hour close above 84.115, which would signal the bearish crossover was a fake-out and bulls are ready to break to new highs. Now we are at the most important part of the video. Most people will skip this, but this is where money is made. Keep watching, because I'm laying out 3 complete strategies with exact triggers, stops, targets, and risk-reward ratios tailored to this silver setup. First, Strategy 1, the sniper, conservative, for traders who want high probability, low stress. Exact trigger condition, sell limit at 83.80 to 84.115, confirmed by a 60-minute bearish candlestick rejection off resistance. Stop loss, place at 85.20, above the major resistance zone, because a break above here invalidates the bearish trap. Target 1, 79.80, risk-reward 1:2. Target 2, 76.91, risk-reward 1 minute and 3.5 seconds. What voids the setup? a close above 84.115 on the 4-hour chart. If that happens, exit immediately and switch to bullish bias. Strategy 2. The active trader, standard, for day traders and swing traders looking for balanced risk and reward. Entry condition. Buy limit at 77.20. Minus 76.91, on a bounce off the first key support zone, with 4-hour bullish divergence or a bullish candlestick confirmation. Stop loss placement, 74.80, below the second major support at 75.33, to avoid being stopped out by fake-out wicks. Once you're in, target 1 is 80.70, our current price, and once hit, move your stop to break even. Target 2 is 82.50. Risk-reward 1 minute and 2.5 seconds on the full move. Let's see how aligned we are. Type your silver range for tomorrow in the comments now. I'm reading every single one to gauge market sentiment. Strategy 3. The aggressor, high risk, only for experienced traders who can manage tight stops and fast moves. Entry. Countertrend fade on a 60-minute fakeout above 84.115, or a momentum short on a break below 80.00 with strong bearish momentum. Tight stop loss, 81.10 if short under 80.00, or 85.20 if fading the resistance breakout. Invalidation is clear. If price reclaims 81.10 or 85.20, the setup is dead. Targets, 76.91 for a fast 3 to 4% move, with explicit warning, only for those who know how to lose small and manage risk aggressively. Do not use this strategy if you can't stick to your stop loss. Quick risk management pulse, non-negotiable. Never risk more than 1 to 2% per trade. No positions through high-impact news. Stops are non-negotiable. Protect your capital first. To wrap up, the single most critical level for the next session is 84.115. Hold below here, and the bearish trap plays out towards 76.91. Break above, and bulls reset to target 86.07. Tomorrow, we'll be watching silver's reaction to support zones and dollar moves, plus our full breakdown on gold and oil's inflation crosscheck. Don't miss it. If you want the full breakdown on Bitcoin and the S&P 500 risk correlation, that video is live now. Check the end screen. Smash like if this analysis gave you a clear plan. Subscribe and hit the bell for daily institutional grade coverage. I'll see you in the next one.